welcome back. You're watching The Money Show and we are getting your portfolio queries answered, and I have with me as an expert today Shweta Rajani. Shweta, let's move on, and I have Mr. Raju on the phone line with me. Hi, good evening, Raju.
Hi, good evening.
You're calling from?
I'm calling from Hyderabad.
Hyderabad. Okay. So I do have your portfolio with me, and the amount that you're investing is almost 6.7 lakhs. Your portfolio has ICICI Pru Large and Mid Cap, Motilal Oswal Multi Cap, and Nifty 500 Momentum 50 Index. You also have a multi cap from Axis and a small cap from Tata, Flexi Cap from Parik, and UTI 50 Index Fund, Tata Nifty 500 Multi Cap Infrastructure, 50 30 20 Index, Motilal Oswal Mid Cap, Tata Nifty 200 Alpha 30 Index. You want to know if you should be stopping your SIPs, and okay, you have stopped your SIP, sorry, and you want to start
Actually,
them
I
again, and
stopped.
you want to know if you can continue in the same portfolio or not. Okay, so now for how long do you plan to stay invested?
For next 10 years.
Sure.
And
Any specific
one thing
corpus that
is
you're
like,
looking at?
sorry.
Any specific corpus that you're looking at?
Yeah, like 4 crores.
4 CR. Okay. Sure.
4
Go
CR.
ahead. You were asking
And
something.
my current age is 40 years, like 39 years.
40 years. Okay.
Yeah.
Sure. Okay. Okay. So,
And I would like to know like which mutual fund like
is better for you to start investment again?
start. Yeah,
Yeah.
I want to
So, what will
start
be
the
your
SIP
per month
again.
amount? What will be the per month amount for investments now? Because since you've stopped your SIP, you will be again investing the same amount?
Like around 25K per month.
25,000 per month. Okay.
Yeah,
And you have stopped SIP in all of these funds. Is that right?
correct.
Sure. Okay, so now we have more details in hand. Shweta, what do you recommend? I think in few of these funds, maybe he can resume his investment, but otherwise, a lot of them, it's better if he just keeps his money invested or maybe withdraw as per your strategy. What would you recommend?
So Mr. Raju, I've looked at the number of funds that you have, and I've seen there is an over allocation towards index funds. While there may be, special smart beta index funds, or there would be the normal index fund. But in my experience, what I have seen is if you are in an actively managed fund, and a diversified, actively managed fund, then you could expect the fund managers to outperforming the index by around, anywhere between 2 to 4%. So since you are looking at a longer time period, I would suggest you to stop. You've anyways stopped your SIPs, but don't continue or don't do SIPs in index funds. And in fact, your allocations that you have also right now, once they are out of exit load, you should look at exiting from these index funds that you have. Second observation I had was that you have an over allocation to multi-cap as a category, wherein you have around three odd multi-cap schemes I was seeing in the portfolio. So my suggestions to you in terms of where you can exit after it's finished a year would be to stop your Motilal Oswal multi-cap fund as well as the Axis multi-cap fund. The schemes that you can continue with and also do an SIP if you want in your existing portfolio: Parik Flexi Cap, Motilal Mid Cap, Tata Small Cap, and Axis Multi Cap. Some schemes that you can add on to. Because if you exit, you need to rebalance and reallocate your portfolio. I would suggest you add on to a DSP Equity Opportunities, SBI Contra, an ICICI Proof Focused Equity, and if you want an SBI Infrastructure Fund. That should give you a balance across different categories, different styles in the portfolio.
All right, Raju, is that all? Do you want to ask anything else?
Yeah,
Sure.
like, do I need to exit from Motilal Multicap?
Yes, you retain the Motilal Mid Cap Fund and exit from the Multi Cap.
Multicap, okay.
All the best. All the best.
Thank you.
Okay, let's move on and let's take Deepak's question from Bombay. And Deepak, lucky you, today we do have Shweta from Anand Rathi Wealth team itself who will be answering your question. So yeah, if you can hear me.
Yes.
Hi.
Hi. Can I ask
Yeah,
a question now?
Yeah, of course you can. Please.
Yeah. So, Shweta, my question is that quant funds are seriously underperforming since last 1 year,
Right.
particularly if you see quant active funds and all, which was recommended by you a number of times on the show. So I just want to understand what is the reason for underperformance, because if we see last 6 months,
Sure.
it is not that much underperformance till the time the markets are down. But if you see last 1 year, then there is a huge underperformance. So what is the reason for underperformance? If you can give your detailed analysis, that will be great.
Sure,
Sure, Deepak.
Shweta, it's not only Deepak. I'm sure a lot of other investors would be having similar kind of questions, pertaining to this particular strategy.
Sure. So Deepak, see, one thing that you need to understand is every fund or goes through its cycle, right? Just like markets go through their cycles, funds also go through their cycles. Now, all of these quant schemes, if I'm only looking at the past performance, then let's look at the financial year 23, 24. All the quant schemes were top quartile in many categories. They were the top rank schemes. 24, 25, I think the cycle turned for them, and the performance went down to the bottom quartiles. So just like a fund doesn't stay in the top quartile permanently, doesn't even stay in the bottom quartile permanently. In fact, what we've seen is there's a 70% chance that once a scheme is in the bottom quartile, it moves back to the top two quartiles over the next 1 year period. That's the historical analysis that we've done. Now, coming to your specific question of what's gone wrong with the quant schemes that led to their poor performance, is if you will notice in their portfolios, they had a certain view on market which they had in fact mentioned in their monthly newsletters as well in April, May 24, where they had highlighted that given that there are a series of global events, they're going to go on a risk of more. They have a cautious view on the market, and they started building cash and large caps in their portfolio. So even the small cap scheme, if you look at their last year April May portfolio, you'll see a high portion of large cap or cash in the portfolio, which did not work for them. So their market call, I would say they were a little early in the market, because markets continue to move up despite of you actually facing all those events, whether it was the domestic elections, certain global factors. So, cutting it down, they were a little early in terms of their market call that there could be a market correction, and therefore it's better to be on the conservative side. That's one reason. And when they deployed the cash, that's when the correction actually took place in the market. So you see their December portfolios, a lot of their cash had got deployed by them, because here again, they said November, the US elections have also taken place, and therefore we can get back into the market situation. But then that's when the increased volatility hit in. So in a nutshell, the call right, but a little early in the market, which could happen to any fund manager. And then, of course, you'll have certain stock-specific calls that also did not work in their favor, which led to the underperformance of the fund. Having said that, the fund manager itself, if you see, is far agile. And look at their portfolios month on month, you will notice that it's constantly changing. And the fund manager himself is realizing that given the long period of underperformance, there is a correction required in the portfolio. So with that happening, this is where you would have seen us also in a lot of shows mentioning that reduce your AMC exposure to any AMC for that matter. It's not just quant, but we say you should not be over allocated to any scheme or any fund house. Diversification is the key. Funds go through their cycles. Can there be a rebound? Of course, there'll be a rebound in quant schemes as well, like we've seen in many other schemes. So that's point one. Second point, if you've looked at past returns and just increased your allocations to quant, please ensure that you're maintaining diversification by not going beyond a 20-25% exposure to any single AMC. Third, look at the portfolio quality today in terms of what is the earnings expectation of the portfolio compared to that of the benchmark. It does show that the earnings or the portfolio quality is good enough, and it's showing a 2 to 3% of delta over the index earnings. So that's something that you should look at. That's something that we also look at. How good is the portfolio quality, the portfolio liquidity? Is there any redemption stress? We don't see a redemption stress on the underlying schemes of Quant. But yeah, like I mentioned, and cyclicality played out for Quant as well. If you are not over allocated, continue with your allocations. If you are over allocated, then reduce it and bring it down to 15% at a scheme level, 20 to 25% at an AMC level.
I think that will be all. Thank you so much for being on the show today, Shweta, and answering all of our viewer queries. And for all our viewers, you can send across your question on our WhatsApp number as well.